All right, guys, I am back again with another video. And in today's video, just want to take some time to show you how to find Ichimoku targets, the easy way to find Ichimoku targets. So Ichimoku targets are part of the price observation theory. So we'll be touching on that a little bit and show you how to find these targets. These targets can be used without Ichimoku, can be used in just any plain market. And I'm going to show you how to do all of that once we get started with this video. So let's get right to it. All right, guys, so this is my disclosure statement. Just make sure you take a look at that. Understand that I am not an investment advisor, and everything that I do and show you today is for educational purposes only. So if you decide to do anything that I am showing you, please consult with your own personal financial advisor so you can consider all relevant risk factors. Okay, guys? So we're going to jump right into this thing. I want you to see how you can easily find Ichimoku targets. Okay, so first thing we want to look at is what targets, what are the targets? So let's jump right to it. So first of all, I'm showing you what you see here is the N value. Okay, so this is the N value, and what happens here is this is an N wave. So we look to take trades, or look to when you're taking a trade, you're going from point A, B, C. So you're going to take a trade at C. So when you take a trade at C, you're looking for point D. That's going to end up being that value. Okay, but that value, so from C to D, is not always going to be the same length all the time. So it's going to be a different length. So with Ichimoku observation theory, it shows you, it teaches you and lets you know where those targets are. So there's a couple different types of targets that you're going to shoot for. So the main one is this N value. And once we get to the live charts, I will show you how to find that N value, okay? So that's going to be one of the things you shoot for. The next one is going to be your V value. So we look at that V value. And again, you're taking a trade at this C area, and then the projected trade goes all the way up to the top where the dashed line is, okay? The top dashed line. And that would be your V value. Now that value is not going to be the same length as what that N value was. But again, this is an N wave, so we'll talk about that also. Okay, because the market basically moves just in N waves. So that's another value that we're going to be shooting for. And then we're going to be looking for, so we got our N value, we got our V value. Then we're going to look for the longest value, which is going to be this E value. So this E value, again, you're looking to take a trade at point C. And then that E value is going to extend to point E. Now, again, it's not going to be the same length as what we just talked about, the V and the N level. All right, so it's not going to be, this is the furthest level. So there are other layers of the E value, but we're not going to get into those levels. This is mainly one of the farthest levels that you need, and you probably don't need to go any further than that. And I don't anyway. All right. And so then finally, the last value that you're going to really be concerned with is going to be this NT value. This NT value is usually the shortest value. Okay. It's one of the shortest values, and I'm going to show you how to utilize it. But if the market moves to the NT value, then a lot of times you're going to be probably in a ranging market. Okay. So that market's going to be ranging. So I want to show you on a chart how to really find this stuff. So we're getting ready to go to the charts. I'm going to show you what you're looking at, and then boom, we'll be all good to go. All right, so let's go to the charts. All right, so here we are. We're on our charts. Basically, you can see what I got here, and I'm looking at a bullish move, okay? So here's my levels on the chart already. I already have those up on the chart. Now remember, we're going from point A, B, C, and we're looking for these values up here. So we usually look to take a trade at C. So C is considered, I call this the 3 level because it's 1, 2, 3, and then 4. You're always shooting for D. So D could be any of these levels, right? So we need to know how to find these levels. So that's where we're going to shoot for. So if we take a trade, the first level we'll run up on is this NT level, then this N level, and then the V level, and then the E level. Now the N and V level are right next to each other right now, but they're not going to be like that a lot of times. Sometimes they're really close to each other, and then sometimes they're a little bit farther apart. But the main level is going to be that N level. Then you may extend to the E level. So let me show you really how to find these targets. So what I do is I get this tool. All right. Let's put it on the chart here. I'm just going to show you this tool first. Let's go to the settings. So this is the trend-based fib extension tool. My settings are going to be like this. So I got trend line, I got extend lines right, and then my level is 0.618. I think these are the default levels here. 0.1. This is going to be one is going to be one of the main levels. All right, this is going to be the one that we're going to be concerned with, and the one we're going to be using, because this is going to be the one that's going to help us to find every level. And then 2.26, 1.618. All right, so that's how I have it on mine. But you definitely have to have that one value, and these others you can put whatever you feel. But in order to find these targets, so the first way is the normal way. So how you would take this tool, you will go from point A, B to C, and that will give you the N value. It's going to be the 1-to-1 leg. It's going to be what most traders know now as a measured move. So things that we talk about with Ichimoku, they're associated with other things that traders would call something else. So here's our level. So you could see this is the N value. Now let me move this down. Let me move this down a little bit. See this N value where I have it? It's 1.0. So that's a 1-to-1 measured move basically. So when I put this back on the top here, it lines up with that N value. So that's the way to find the N value. You go A, B, C with this fib-based trend extension tool. So when you use this, again, let me show you how to do it. Grab the tool, put it on point A, B, and C. That's going to give you what is called your N level, your N value, and what other traders know as your measured move. So that's going to be the measured move. This leg right here, A to B, is going to be the same length as C to D. So D would be at this N value, where this level is right here. So that would be AB is the same length as CD. Let's try to measure it in C. Okay, so let's use this tool. So if we measure from here, and I'm not probably exact on levels, and I don't know where the high is here. It's right there. So that's 323 pips, right? So from this point, there it is, 323 pips, the same thing. Pretty much right on the button there. I'm probably off a little bit from just where I put it, but that's what you're going to get. This leg is the same measured move. So when we take that trade here, we can expect that trade to move to a measured move or to the N value right here. So that's how you know your one target in the trade, or your first target that you're going to be looking at. All right, let's get rid of that. Now to find these other targets, it's going to be a little bit different. All right, so I'm going to show you how to do that. So to find the next target, which is going to be, let's go straight to the E target, the farthest target. We're going to grab this tool. We're going to click on A, the low, the swing low, then the swing high, the fractal low, and then the fractal high. And then we're going to just click it again, double click it. That gives us that 1-to-1 leg right there. So again, this is a 1-to-1 leg. So what it's showing me, this is going to be my furthest target. So this leg, again, was 323, 319. I'm off a little bit, but anyway, when you put it on there, you could see that's the distance that it moves. So that's going to show you how to find that E value, that farthest value. All right, and it's very good for you to know these levels because when you take a trade, that's where you're looking for the market to go to. All right, and you don't even need the tool. I'm going to show you how I'm marking all these without the tool. And then the next one is going to be, let's go to your E level, your V level. So we did our E level, our N level, and now we're going to do the V level. So the V level is going to be a little bit different. All right. So let's get rid of the tool. And then we'll bring it back so I can show you. So this time we want to go from the top of B to the bottom of C. Click it. Actually, sorry, I'm back. I'm upside down. I'm doing a we want to go from the bottom of C to the top of B. Click it one time, click it 2 times, and it gives you that level right there. It's saying that this leg is going to be the same distance there. So let's measure. So we take this tool and we say that leg is roughly 163. And if we move it up, we're about 163 right there. So that is your V level. All right. So that's going to be your third target. And now we're going to get rid of that. And we're going to find that last level, which is this NT value. All right. So here's how you find the NT value. Take the tool, go from the bottom of A to the bottom of C and double click it. And it takes you right to that level. See this one, that one is going to represent the level, and that's where NT is. All right, so that's going to be NT. Now NT, well, let me tell you about NT. NT usually moves up to this swing high right here, to this B level. So NT is going to be in that area. Sometimes it's lower than that. And what really represents that is the move up from A to C. All right. So the shorter the move, then this would be shorter or bigger or longer. So you're going to see it usually line up close to this level B. This level in Ichimoku is called basically a fluctuation level, because what happens is a lot of times the market gets to this point and then it fails to get through that point, and then you'll start to see the market go sideways. And what it can usually develop into would be like either a P wave, or else it may develop into an ascending triangle pattern and then break out to the upside. All right, but if you get stuck here, that's where you probably want to take your profits, because it's probably going to retrace and you're going to be stuck in a trade that's not going to work out for you at that point. Okay. So that's going to be your levels, your values, your targets, each target. So one thing that traders always learn to trade is basically, this is like the 1, 2, 3. Okay. So if you trade that 1, 2, 3, I don't know why traders are taught to take a trade at the 2 level. Okay, but taking a trade at the 2 level is the worst place you could take the trade. Number one, I just told you it's the level fluctuation level. And it's not only an Ichimoku fluctuation level, it's a market fluctuation level, because you're trying to break a high here. All right. And then the second thing is your risk is going to be even more. So what you're trying to do is you're trading a trending market. And when the correction ends, you get into the trade. All right. So what I have here, we're using our own indicator that changes the colors of the candles, and that's when we get into the trade. So basically, like what we'll do in a bullish market, let me show you. We're going to take our trades on the first green candle. So if the market's trending to the upside, and all I'm using here is Ichimoku Kinko Hyo. This is a Kinko Hyo strategy without the cloud. Reason I'm not using the cloud in this right now is because a lot of times when I'm trying to show people or train people about using Ichimoku, there's a couple different concepts when you think about that cloud. That cloud is a longer term trend, and people can't understand the immediate trend and the correction and the longer term trend. So it gets everyone all out of whack. Okay. So what you want to learn is just the immediate trend and then the secondary trend. All right. But then when we look at this, we're going to take a trade. Like when we're looking to trade, we're looking to trade when the color change. So we'll take a trade there long. Then we'll take another trade long right here. All right. And then pretty much runs all the gambit. We don't even never get out because we wait for the red. And then we got a red candle. So if you weren't in a trade, you take a trade here, and then this is where you would be your first loser. So out of 3 trades, you get a loser because now the market's starting to change direction. So as the market changes direction, we want to make sure where we are. So here we are. All right. And we could see like this is flat here, but then we get a crossover. So we got a bullish market here. So we could look at a trade here because we wouldn't know that this was flat right off the bat. I mean, you could tell a little bit. All right, so one area where we would probably take a short would be here because we got a red and we got our crossover as bearish. Wouldn't be a lot of profit, so you would probably be able to benefit from that. Then another area would be here, but then this is, again, not a big trade because our crossover still, you could see our crossover. But now when we crossed over and we're bullish, we would take this long trade right here. All right, so that would be our long trade. All right, and everything's there for you. You just have to take the trades based off of the candle color. You wait for that color and trade the direction of the trend, and you're good to go. So then the next one would be, you wouldn't short here because your crossover is bullish and your cloud, your TK cloud is bullish. All right, but then when it crosses over here, we get a support, a resistance of Kijinsen. Then we would take a short right here, and you get a good winner. Then we would take another short right here. And then, like I said, we would come into the market. We would come into the market long now. We wouldn't have taken any of this right here because it was already green. We wait for a change, the pullback, which would make us red. Now here would be a losing trade because we would take a green right here. And that was near the top. And then we would get stopped out. But then we would come back in with a trade right here, long. Now, for me, when I see a bounce on Kijinsen setting up like this with nice price action, rather than wait for this, I'm going to take my trade here. Now, depending on what I'm trading, like if I'm trading like futures or something, I'm going to put my entry at this level here. But if I'm trading like futures or something, I'll be looking at volume also to help me to understand what's happening here. And I'm getting a support trade here and price action entry. So I'll take the trade here rather than way up here. All right. Because we would have been entering like way up here at this point. But still, when you get a good trend, you could see, you know, this makes our risk a little deeper. And see, this is also that level where I told you you don't want to really get into the trade. So when I'm getting into a trade, I don't want to be at the 2 level. I rather, because a lot of times, it's, like I said, it's going to either correct a little bit, it's going to range, or else it could just go through. So I try to get this price action entry trade right here. That's going to be my entry right there. Okay, so that's what we're looking at, and those were the targets. Let me show you how to find these targets without the tool. Remove these drawings. Oh man, I removed all the drawings. Sorry, that's all right. I still could show you though. All right, so we're gonna look for our end level. So let's say our end level. Where's our end level gonna be? So we're gonna look for that end level. So if I'm looking for the end level, we're going A, B, C. Now what you see here is that the market is in a move to the upside, and when you're in a move to the upside, you get N waves. Let me show you what I'm talking about. All right, let's use just, what can I use, guys? I can use this. So the market goes in an N wave like this, up, down. So that's the N wave to the downside. That's a bearish N wave. So we want to know if the market's going to continue going to the downside. So we look for the next N wave. In order for an N wave to develop, it has to do this. Go down to this point, but it has to violate this point and go down here. And that would be another N wave, right? So that would be N wave to the downside. But when we have an N wave reversal, the market fails to break this level and creates it's another N wave. So then you could see here now the new wave like this. So you went 1, 2, 3, 4. So if you knew you were getting into a new wave, this would be A, B, C, and then you would be shooting for D. So you would have your targets to know where you're going. And also now you know that the change in market developed because you could see we didn't violate this low. We broke this high fractal here, this previous bull fractal. And now that's a good sign that the market's moving to the upside. So now we're going to try to get into a trade. All right, so as we try to get into the trade, we look for the N wave. So we already had the one N wave. Now we're going to go look at the next N wave. So it's going to go A, B, C. In order for this to be an N wave, it would have to violate this level. So we always take the trade at the 3 level or the C level. All right, so and that's going to automatically be for us because we're taking trades at fractal levels, horizontal support and resistance levels, Kijun-sen, Tenkan-sen, and so forth. And they're pretty much going to line up at these levels right here. All right. So it's always going to be like a pullback trade to get back in with the trend. So then the next thing is how do I find my target? So we said we want to find that N value. So all you have to do is this: A to B. Take it down to leg 3. And that's your N value right there. So that would be your N value, right? That would be your N value. Okay. And then we take that tool. I deleted your N value, but that's cool. I just showed you where it was. So now we take the tool and we're going to look for the farthest level, the E level. And I shouldn't have even moved what I just did. I could have just extended it for you. But here we go. We move up to the top here because here's where we corrected. So now we take this and go to the top. All right. So put it on the top of B. A, B, and then double it. And that will be your target there, your E value. So now we want to see our V level. So you take this low here at C to the top of B, and then you take it and put it on top of B. All right, and now that's going to be your V level, almost going to be lined up with the N level on this case anyway. And then finally, we're going to look for our NT level. How do we find that? We go from this bottom A to C, and then put it on top of C. And that's going to be your levels. And you don't have to be precise to the point like pip right on the nose, but you got to be in that area pretty much. All right, so that's how you find the bullish market levels. Let me show you the bearish market real quick. So here's a bearish market. Again, you could see same thing. The market moves down to these levels. That's where we're going to be shooting for these targets. So I would do the exact same thing. So I'm not going to use the tool this time. I'm just going to show you. I'm just going to do the measurements, right? So doing the measurements, like I just showed you, which is simple and basic and easy. So we want to find the N value. So we go A to B, and then we're looking for that N value. So we're going to put that down to C. All right, right down to C. And we're right there. So I probably wasn't precise. If I get super precise, I'll be right on the nose. Watch. So that's precise right there on that low. So then I take this and move it to the top of C, and that gives me that level right there. See? Right on the nose for N, your N value. So we expect the market to make a one-to-one move, a measured move right down to there. So if we're looking for, let's say we're looking for the E level next. This same leg is this distance, right? So let's put it on top of B this time instead of C. And that's going to give us that level. That's the level right there. That's the E level. So then we're going to look for the V level, all right, which is going to be right here. In order to find that V level, we go from the top of C to the bottom of B, right there, and then we take it and move it to the bottom of B, right there, and we're on that level, right on the level. And then finally, to find the NT value, we go from A to C, and then put it on top of C. And that's your NT value. You've just hit all Ichimoku targets. Now you know how to find your targets. This is better than Fibonacci, okay? So you find your targets that way. Test it a little bit, play with it, and see if it works for you. And again, it doesn't even have to be Ichimoku, right? You could look at a chart like this and do the exact same thing. All right, so you don't need to know. All I need to know is now that this market is in a downward move, so we're moving to the downside. We get a correction, so we should continue to the downside, especially if we break this level. We know that that N wave is continuing, right? So I just showed you previously about the N wave. So we think now we're going to be shooting for a target down here. We don't know where though. So in order to find that target again, one more time, we're just going to go, whoops, we didn't want that. We wanted this. Where is it? So we go A to B. We want to find this target, right? This is going to be the furthest target, so that's going to be E. So we would have a level at E. See if the market comes down to that. We would have a level at our N level. So it would be the same leg. And it would be here. Then we find our level for our V level, which would be from here to here. This, all right, so it's going from A, B, C back to B, and then we take it and add it on top of B. So that V level would be there. And then finally that NT level would be from here over to this level here. And then we would go on top of that level. Right there. We would look for the market to move to one of these levels. Let's move the market to see what it does. It stopped at this level. All right. Paused a little bit. You could see where it paused. Came down to this level. This is our V level. And then our N level. That's where we take most of our profit. Then we break through, and then we come down to this level. And then we find resistance. Market drops. And you can see we keep these levels on for a while till they're no good. And you can see how the market's honoring this level. Came back down to this point. And then boom. That should show you that these levels are valid. You can see nice bounce off of this level. Good trade again, back to the downside. So these levels are valid. This stuff will really help you. I don't know, guys. I don't know what to tell you. It's basically that simple to find the Ichimoku values, the Ichimoku targets that you're going to want to be shooting for. I shoot for these targets all day, every day. Whenever I'm making a trade, I'm always shooting for that N value because that's going to be one of the most important. It's a measured move. If you Google measured move, you'll see how many people really shoot for a measured move in the markets, and because the markets kind of do the same thing, they repeat themselves. All right, the markets are fractal in nature. Okay, so that is gonna be about it. I think I'm done. Okay, so guys, I know it's been a while, and I'll be back with some more videos. I'm not gonna give you all Ichimoku stuff. I'm gonna give you trading, period. Been trading a lot of futures lately, so I want to be able to show you guys some of the things that I'm doing with the futures market and so forth. Don't always trade strictly Ichimoku. I trade a lot of, like I showed you previously, I trade the Tenkan-Kijinsen moves only. Sometimes I don't even trade Ichimoku fully. Okay, so I'm day trading that S&P 500, and I'm going to show you how I do that. All right, guys, but till next time, hope you have a great one, and God bless. So long.